but I guess I just don't feel confident in probabilities. Maybe more in statistics, but I don't know. It just seems like a guessing to me. But too much of a risk, huh, sis? Yeah. Too much of a guess.
So you said that when I did the height thing, right? That helped build your confidence in it, right?
Yes.
Okay. That was actually the purpose of doing that exercise because I know how it can seem. I know it can seem like, wait a minute now. So we really just gonna be like, it's this far, so it's probably done. You know what I mean? So I get it. But when you do that exercise, and every time I've done that exercise, we have never, I repeat, we have never done less than 70% correct. Right?
Yeah.
We've always hit 70% or better on that exercise. It's the same thing in trading. Whether you know it or not, you're applying it anyway. In all that you're doing, look at how much you win.
Yeah,
right.
True. And I spoke to some other people that I know that are big into like statistics and probability from my former job, and just hearing them talk about it too, and just be so convinced. I'm like, I think I just need to, just keep learning more too. And it seems like it's more men that are like that. I think for us women, we're more emotional. We more like, I don't know. I just need to see a little more. I need a little bit more. So that's why I like to let me get in at the extremes.
Right.
When it's really beat down. Then I feel it's okay. I'm like, even if it go down any further, it ain't going down that much. But there's no way unless something is really wrong with this company.
Guess what? That's what I meant to say to you. That's what I'm trying to say to you. That's the same thing. That is you're playing the probabilities and the statistics. It's the same thing. Even so, because what you just described was standard deviation. That's what you just described. Do you understand what I'm getting at? You literally just described standard deviations. So.
Okay, give me the extremes. That's what I want.
Yeah. That's the standard deviation. Now, the stream is up and running now. I'll put the link at the top for those that want to pop on over there. Give me a second here. Let me make sure I say what's up to everybody. Give me a second. No, let me grab the link.
Just want to say good morning to everybody as well. For Sean, that was a fantastic good morning. Just FYI, I feel like I'm gonna have a wonderful day today. Oh, repeat. I missed it. Good morning, guys.
Let me dial my good morning down now.
Yours always dial down.
Let me dial my good morning down a little bit. I'm dialing it down more. I'm going Eeyore status, Nisha. Good morning.
Especially in the morning. Yours dial up in the midnights.
Yeah, Rashawn was like, no, it's gonna be a good morning.
Good morning, Alicia. Who else we got down there? Yolanda, Doreen, Naveen. Good morning, Renee. Rashawn, they asking for you, man. They calling for an encore, man. Where you at?
I'm here. Good morning.
Hold on, you left out the Happy Friday now. You gonna left out the Happy Friday, Rashawn? There you go. Okay, there you go. I'm about to say that was not an encore, man. An encore involves a whole repeat. But okay. So, Anisha, we're gonna run through one of those exercises today. And guess what? The most beautiful thing is with the implementation of AI, I've been able to just simulate a classroom. We can just run it like that. Right? So we don't have to go through everybody like, what's your height? What's your height? What's your height? Nope. I just simulate a classroom and do it like that. So we're going to do one of those today. But so let's talk about probabilities and odds real quick for a second here. Right? So, and let me write this down because I want to actually talk about what you was talking about a second ago as well. Let me write this down real quick. As far as the you were asking about the psychological levels. right? I'm gonna punch in something here in a second to get some of like the other ways they describe it, right? Because some of the other terms are eluding me, of course. All right. So here's the thing about probabilities, right? The market runs on them. The entire stock market runs on probabilities. Every single price movement you see comes from some probabilistic outcome that they see. Right? Here, let me show you something. Show you guys something real quick. Again, for those that are joining us for the first time, you click that link at the top and you'll be able to see my screen. I'm about to show some things. Okay. Fed watch tool. All right. 5 days away. You see this? There's a 97% chance we are not cutting rates. I repeat, 97% chance you ain't getting no rate cut. Okay? Now, what else does it tell us? Okay? It tells us that the odds are increased that GDP will remain strong over the next quarter. All right, let's take a look at that real quick. Watch what I'm doing here. Watch what I'm doing. Right? Because okay, let me just ask y'all this simple question. What's the main reason they would not be cutting rates right now? Give me the top 3 reasons they wouldn't cut rates. Top 3.
Why not make inflation worse? Would that be one of them?
Inflation is a concern. Okay.
Yeah, that's what I was about to say.
All right. Give me one more. What else y'all got?
The economy's okay. Everything's okay.
The economy's okay. Well, okay, that covers 2 things, Alicia. So we'll count that as 2. Inflation, employment, and economic growth. Those are the 3 main things. Inflation, employment, and economic growth. If they see, let me show y'all this right now. GDP. Now, y'all ready to look at this? Y'all ready to see this? This is
So what, basically they want to think there's stability, so that's why they won't?
No, not that they want you to think it. So they're getting the information from us. So based on what we are putting out there, because remember the Fed is independent. So they get the information from us and then they make a decision on their end. So the information they're getting from us is telling them that we're fine. So not that they want to make it seem like it's fine, but we're telling them it's fine. And so they're like, oh, okay, well, you know what? Carry on. We don't need a rate. We don't need a rate cut. That's what they're basically saying. Now watch this. Look at the GDP numbers. Do y'all see that spike in GDP projections? Look at that. Are y'all seeing this?
Yep.
That's crazy. 5%. That's the current projections. So you may not expect any massive shifts in employment either, right? So in that regard, we may say everything's fine. Now, here we are. Market is open. Let's take a slide over here real quick. Let's slither us on through. See what's happening. All right. Now there's an open lower on SPY. And we'll come back to the probabilities conversation in a second. I won't forget. Matter of fact, I'm gonna write that right down in a second. I'm just gonna. Okay. So got an open lower on SPY. It's a blue open, so lack of supply at the moment. Now we've talked about this before. When you see lack of supply or lack of demand, that could also be, institutions essentially hiding their hands at the moment, meaning not putting a lot in at the moment, just kind of like leaking their way in a sense, right? So that's very possible. So sometimes sometimes what you see as a lack of supply could be a lack of institutional activity, right? So keep that in mind as well. So blue or orange could be truly a lack of supply, and in which case you would see the market pick up, or it could just be a lack of institutional participation, in which case, well, this lack of supply, um, would potentially turn out to be a move to the downside instead of to the upside, right? But the market's opening and pushing higher here for now, so we'll see. It's opening slightly lower than where we closed at yesterday. On SPY here, let me go ahead and refresh this. You guys will notice I moved our market summary to the right here. All right. I think they're still gonna make me back and forth it. Okay, that's about right. All right, so we're still below this weekly pivot. All right, I'm gonna run y'all through this again. What's up, April? Good morning. Good morning. Long time no see. What's up, Prince? What's going on, boss? So I'm gonna kind of walk y'all through this process again. And if you notice, yes, we got this going on over here, but my eyes don't start here. I'm not just gonna run here and just start reading market summaries. It's just not. That's not what it's built for. It's built to help you understand what you're looking at. But it's not built to help just tell you everything. But when I read this to you guys today, y'all will be like, "Yo, that's crazy." All right, so weekly pivot. We're still below that right now. For those that are unfamiliar, the weekly pivot is is essentially the average price of the previous week. So the high, the low, and the close, divide that by 3, and you get your average price. We don't use the high in that particular formula. It's not meant to use. I'm sorry, we don't use I meant to say the open. I meant to say in that particular formula, just the high, the low, and the close. Okay. So the average price is 691.26. We're at 688.20. All right. As of right now, you have a pretty decent amount to the downside here before you would, again, these are your boundaries, right? Right here. So if we're looking towards the upside, meaning we're off of the lows right now, right? We're much more off of the lows than we are off of the highs, right? So these are your lows right here. These are your highs right here. Most recent move. Right? Now, I'm going to show you guys another trick that you can do with this. This is if you want to use it this way. All right. Another trick that you can use with these GAN retracements. And it'll kind of combine GAN and N Williams percent. If you want to try this as well, this also works. So it's a really good way of looking at it. So you can add the 0.8. Yeah, put 0.8, otherwise I won't do it. All right, and then you can add the 0.2. All right, you can add those two there. And so you can see here, look, where did it just open up at? Right at the 0.8. Y'all see that? Now, I didn't look at this before the market opened, but this is kind of what we're talking about. The statistical boundaries, the probabilities, all those things. It opened right at 0.8. It struggled to get back above it, but that's exactly why you would have it there, right? Because anything that happens in this area is going to be a sign of strength. Because the market could, let's go to the 15-minute chart, let's just say. If the market, just open right there, right? Right there. So Anisha, you see what I'm getting at now? All right, Justin, you too. You seeing this? These are the things we're talking about. Right? These are the things that create your boundaries. These are the things that everybody's watching. All right. And you can see that right there. Market opens there, hits, and just starts to take a dip from there. So, these are where your statistical strength is going to be. We have another minus 20% right here, by the way. This is from the 14% range here. 687.04. Yeah, still 687.04. All right. So even more so how that would play out there. And actually I need to reverse this anyway. It's gonna be the same thing, but this would be your -2 right now. So you see here. So this is a longer term percent range here. This is a longer term 20% mark. So in the end, what's going on, Kenneth? I see you over there, Alicia. What's going on? What's going on? So yeah, this would be a longer term 20% range right here. This is for the short term. This is the short term. This is the one that we just set. Just yesterday. This is the one that's been set over the past 14 weeks. So we're kind of watching both of these to see, how that plays out there. But this is what it's looking like on SPY right now. Right, this is what it's looking like on SPY. So we will see. Let's see how that plays out. All right, let's go back over here to the pro pivot really quickly. All right, so yeah, but your boundary is about 680.83 though, right? This is like your minimum boundary right here, right? 680.83. So, long ways to go. We're talking all the way down here. Talking all the way down there. All right. So, but you can see how that would be such a big turnaround. Obviously, it's significant, right? You can just see that. So when you see those stops and where they're placed, that's literally what they're telling you. Like, yo, if the market drops all the way back down here, consider it over. It's pretty much what they're telling you. All right. Then, like I said, you can decide, are you using a wider range? So the wider ranges hold the higher probability outcomes. The more narrow ranges focused on what could potentially be just noise. Right? So you have to accept a certain amount of noise in every scenario. The wider range accepts more noise. Right? The tighter range accepts less noise. But, what is noise? Let's talk about that, right? When we say noise, here's what I'm saying. And you can see it. Look right now, right? How many times has the market dipped down here and bounced back up so far since I've been talking? 3, 4, maybe 5 times so far. That's noise. That's noise, right? And especially noise if it ends up bouncing to go to the upside anyway. Then it's especially noise. Notice what it did not do so far. What did it not do? It did not break this minus 20% yet. This percent range right here. It did not break this level here yet. So it took the short-term 20% to the longer-term 20% range, right? And now it's bouncing back to the upside. We'll see. I don't, I'm not proposing to know what's going to happen next or whatever, but you can see what's happening now. And would it be a coincidence that it's happening at these exact levels that we're talking about right now? I doubt it. Does anybody else doubt it? I doubt it. I don't think it's a coincidence. Now, let's talk NASDAQ real quick. Look at this. Look at it. Beautiful stuff. All right, let's talk NASDAQ. Let's talk. Oh, wait. Let me read through this with y'all real quick because this is. So here's how it reads lately here. So on the market summary, SPY is trading above the neck. That's crazy. Look at what they just said. They're bringing it up. SPY is trading above the negative 20% retracement, 687.04. That's crazy that the algorithm is bringing it up. Right? The RSI is at 54, with price holding near the 0.3 standard deviation boundary. Right? Price is testing the micro trend limits. For swing trades, wait for a definitive daily session close outside of the bands to confirm a trend expansion. Our algorithmic mapping identifies the primary signal as a continuation of trend flow. The setup is aligned with the flat 20 SMA and the inside range. As a result, we should remain aligned with the primary trend while monitoring interaction at the negative 20% retracement. Okay, which is exactly what we're doing right now. Notice we didn't have to read that to know what to do, but it just confirmed some things. It just confirmed a few things there, for sure. All right. I want to point out one more thing actually about SPY, and that is your weekly pivot is right there at the point where your 5-day trend turns bullish. Right? I repeat, your weekly pivot is right there at the point where your 5-day trend turns bullish. So we could still end this week with a like if we end this week above 691.40, it's officially been a bullish week with some momentum heading into next week. Does that make sense to y'all? How I just explained that? All right. If we close above 691.40, it means we've officially had a bullish week with momentum going into next week. All right. That's how you would look at that. So we will see how that plays out. Can we get above 691? So this is 690 here. So we're gonna need a close above yesterday's high. So that's gonna be a tough one, huh? As how the market's been looking lately, asking for a close above yesterday's high whew. You did have some right here. You see some accumulation down here. See this? So we did have some accumulation here. You see your 2 points right there. And y'all check y'all chart, see if y'all see the same thing, right? 15-minute chart. Last two 15-minute candles of Tuesday, January 20th. You should see some accumulation happen here. Right? It's accumulation and a climax selling point here as well. Right, so let me know if y'all see the same thing on y'all's chart. And what we're doing right now is why it's always so easy for us to take a trade when time comes. Just continue to analyze the market, understand what's going on. So, it wouldn't be that difficult to say, yep, yeah, I'm closing out if I saw this here, that there, wouldn't actually be that difficult. Right? Let's keep going. Let's go to the QQQ. Same thing here. So they're trading at around 620, but around 622 is where your weekly pivot is. All right. But unlike the SPY, it's going to take a lot more than getting above the weekly pivot to change the trend here for the NASDAQ. You got to get to 625.49. Sheesh, that's crazy. But it makes a lot of sense because look at where your 20-period moving average is. I'm sorry, your minus 20% range, I meant to say, is. Look at where that is. Right? And we're still below our 20 right now, speaking of that, actually. Right? So I'm just saying. Just something to think about here. All right. Got a lot going on. All right. So we're still trading below this point here, but we're well above our 38.2% retracement. So no worries there. All right, your boundary is all the way down here at 609. So you're, again, it'd take a big drop to change things today. Right? Take a big drop to change things today. So in my eyes, this says that the market, is likely set up for a move higher. But I could always be wrong. We're still above that 50% range right now. Let's see what's going on with this most recent move, though. Let me get rid of this and this here. Let's get rid of that. So same thing, right at the negative 20 right now. Right there. So same thing as SPY. Only thing, they open a little bit higher than theirs and kind of had to have a real pullback to test it. So you're actually getting more strength. So this would be considered greater strength on part of QQQ today. So what am I saying? Let's go back to SPY. You can see SPY is below that 20% mark there. Not this one right here. they're below that 20% mark. All right, you can see here, this is your 20% right here, 0.2. All right, so SPY is below that 20% mark right there. And QQQ is slightly above it. That shows strength for QQQ, weakness for SPY. The question becomes, here's the question, right? In which direction will we get the confirmation? So what we want to see is at some point today, both of them closing above the -20, or both of them closing below the -20. And then that kind of helps you to understand where you're at with things. All right. So this is how you can take the indexes must confirm each other approach. All right. So for those that don't know, that's Dow theory. Right. And in Dow theory, it basically suggests that if one index is doing it, the other index should be doing it. Otherwise, it's not real. All right. So for right now, SPY is above their 20%. I'm sorry, QQQ is above their 20%. SPY is not. So it's not real right now. We need SPY up here. This is what we need. So we will see how that goes. We'll see how it goes. All right. Let's check XLK real quick, see what's going on over there. Let's see what's going on. Let's start. We'll check through our trades real quick. All right. So 141.99 is still the still your stop. You would only change that if it went higher. So if you're long, your stop loss should only move higher. Oh, I'm sorry. No, it did move higher actually. It's 140. It's a couple pennies higher actually. It was 141.74 yesterday, so it's 141.99 now. I was thinking about the 81.99 from Netflix. So 141.99. So it did move a little bit higher. So just about 142 is where we clock out on XLK. All right. Let's take a glance here.
Please repeat that. You said that's when you clock out?
Yeah, 141.99. If we close below that, we're out of there. Yeah?
Got it.
All right. 145.50 is your weekly pivot. You're at just about 144 right now, and only about 40% of your range has been spent, which leaves 60% on the table. That's exactly about $1.50 here. So that tells me that the weekly pivot is literally almost exactly where we might end up. So maybe a slight close above the weekly pivot or at the weekly pivot is possible. Isn't that crazy though? Look at how those numbers line up. All right, from 144 to here, right? So $1 and like 25 cents or so. So if we get the full range, we end up above the weekly pivot. However, we are still trading on the low side of the range. That is not a good deal. Okay, not a good deal at all. And our average price is now below our 20 SMA on tech. Thankfully, we're in a flat range right now. right? So the market could bounce in either direction from here. Okay. We don't try to predict things. We just play the boundaries. Just play the boundaries. If they never touch that 141.99, if they never close below that, we stay the course. All right. Let's see what it has to say about tech here. So XLK is trading above the previous low. RSI is at 50 with price holding near the 0.9 standard deviation, consolidation phase. So market, look at that. Look at that. The market is rotating within its established value area. So it's literally calling, it's marking this as consolidation as it should. You have a flat 20 MA, you're trading inside the range, right? Right here. If you follow my mouse, you have a flat 20 SMA and you're trading inside the range. Average price, pretty much right at the 20 SMA as well. So certainly consolidation phase. Swing setups are low probability here. Wait for a deviation toward the bands. All right, so we're talking 144.91 over here from the daily bias. All right, our algorithmic mapping identifies the primary signal as a continuation of trend flow. So this setup is aligned with a flat 20 SMA inside range. As a result, we should remain aligned with the primary trend while monitoring, right, how we interact with the previous low. Okay. Pretty much what they're talking about here. So this is your previous day's low right here. All right. So this is what they're talking about. All right. So let's see how this plays out from here. Okay. We hit that high volume node yesterday. And fell from there. It's quite possible that we're heading back to that high volume node. Let's see if it's still a high volume node. Yes, it is 145.64. Yes. So we're probably going back to test that high volume area, seeing as we just tapped it a little bit once there. But notice we tapped that and got a climax buying right here. Right. So all that buying got met with sellers, and that's what happens here. So when we hit this point right here, pretty much as we hit this point, Main Street went crazy. Not Wall Street, but Main Street went crazy at this point. That's what they're basically saying. So whenever you see this purple candle, that means Main Street went crazy at this point trying to buy in. Right? And you get this purple candle right here because we're pretty much saying that for every person on Main Street that wanted to buy, there was somebody on Wall Street that wanted to sell. Right? And so boom, you get all of your demand gets crushed by the fact that the supply kept up. So you get pushed downward, and then you can recover a little bit, but not much, right? Okay. Let's check this. So we're looking like here. So the high volume node is going to end up being our right. So we went down and pretty much tested the 50% retracement this morning is what happened. All right, so we went down towards the 50% retracement. Remember we talked about the last time, not hitting that 50% retracement before you bounced was a sign of strength, right? Not hitting it before you bounce was actually a sign of strength. We'll see if that strength holds up, though. That's the question. Right? Does that strength hold up? And of course, can we get back above the minus 20% mark? There's also that part. Can we get back above that? Yay or nay? Same thing we saw on the major indexes here from tech. You see a lot of accumulation happened on this low end right here. Right? A lot of accumulation. So what they're pretty much telling you with that is like, you see how narrow the ranges the between open and close are on these candles? See how narrow those ranges are? So basically what they're saying is without the market going anywhere, people, right, would just throw money at it. Right? And there's only one group of people we could be talking about that could throw enough money at something to make it recognizable. Right? It's either all of Main Street at once, which is highly unlikely, or it's an institutional footprint that goes to show that they did, in fact, buy in at the lows of Tuesday, which is essentially what brought us higher now. Isn't it beautiful to see these things and know these things? It's just good stuff. All right, let's check Netflix real quick. All right, we haven't looked at Netflix all day. I haven't looked at my portfolio today. I have no idea what it looks like. No idea what it looks like. Ah, okay, there it is. So Netflix is about to break the highs of yesterday. Okay, so it looks like for now. So, look at this, right? It's like a pretty deep. I mean, it's somewhat of a W, right? Somewhat of a little W.
Wait, Dee, did you see that article I posted? And is that going to have any impact? Because I don't want him anywhere near my stocks.
Of course, it could have impact. But I mean, if it matters to you, it's likely a positive impact because he bought bonds, which means he believed the company is financially stable.
Gotcha. Yeah, I did notice. I believe it was Alicia. No, Anisha that mentioned that. But so, how do you buy bonds of Netflix? Because Anisha stated the profit he would be seeing on that yearly anyway would be like $60K. Like I didn't even know you could buy Netflix bonds.
Yeah, so he bought corporate bonds, which is basically their debt.
Mm-hmm.
How can you do this? Is that like a thing anyone can do?
If you have access, yeah. But yeah, you can do it.
Do we have access?
Yeah. Go look
You
at.
can buy Netflix bonds.
Yeah, it's on the secondary market. Right. So basically, you have your primary market. That's when it's originally sold. Right. Then you have your secondary market. That's where people who now hold the debt want to sell it to somebody else. Right. So that means this is not new debt that he's buying.
Gotcha. But he's basically putting his hand out and saying, "Where's my cut?" Is it?
Yeah, pretty much.
God damn it. Thank you.
Yeah, great job, Anisha. For real. Yeah, I'm seeing you, Anisha. I'm seeing you. You're out here,
We listening.
I know they got you as a barber, but we might have to change your name to Cook. You know what I'm saying?
All right, let's cook.
No, but like, so this is what we're talking about with the boundaries, right? So our boundary, let's check where our new boundary is set at. Where our new boundary is set at. So let's see here, Netflix. Hmm. 81. So okay, so our new boundary would be lower, so we don't touch it. So 81.99 is still our boundary. Everybody get that? Does that make sense to y'all?
Check it out.
Right. So again,
Yeah.
our boundary yesterday was 81.99. Right. I'm just using the term boundary for the day. You know what I'm talking about.
Gotcha.
We're using the term boundary for the day just to for the sake of driving the narrative, so we understand what we're saying. Right. It gives everybody an opportunity to understand. Okay, we're gonna try this. Good morning, Joe. Good morning, Benz. Again, for those that are just joining us, feel free to click the link at the top of the screen. I am showing everything I'm talking about. All right. Benz, give me 1 second here. All right, and then we'll talk. Let me just wrap this piece up here. Okay, if you don't mind. So 81.66. So basically, if your stop loss, if you're long the market, right? Your stop loss should be trailing your stock higher. Okay? So always make note of what your current stop loss is. Always make note. So that way, if that number goes lower, you never touch it. Okay? So it went from 81.99 to 81.66. 81.66 is the new boundary. But because we already had 81.99 as our boundary, we cannot look at 81.66. That is against the rules. Right? That's a broken rule there. Okay? Does everybody understand that? Do I need to explain that again? Or we got it? Put a 1 in the chat if you understood that perfectly. That's a very important note.
I didn't understand that. Why can't we? So if please repeat.
Mm-hmm. Well, you want to ask the question first? Go ahead, and I'll repeat it. I'll repeat it and answer the question.
Confused. So you said the previous low we had was 81. Boundary we had was 81.66, and today's 81.99. But we should.
No. Today is 81.66. No, don't go on mute. I'm just letting you know. Today is 81.66. Keep going.
Okay.
Keep going.
No, yeah. Okay, so today's 81.66. The previous low was 81.90.
No, not the previous low. The previous stop. The previous boundary.
The previous boundary was 81.99.
Yes.
But you're saying we shouldn't go below the 81.99?
Right. Exactly. So.
But on your stop is 81.66.
Exactly. Right.
So
Check
that work?
Check my screen.
I'm checking.
All right. Let me know when you're there.
I'm there.
Okay. Here's what I want you to imagine. Right. I'm gonna move this off my chart. Let's get this out of the way right now. Okay. I'm gonna put a horizontal line on my chart, and I'm gonna bring it all the way down here. Okay. I want you to imagine your stop loss started off. Let me go to the hourly chart. There we go. It's better. I want you to imagine your stop loss started down here. All right? Imagine that. Then I want you to imagine that this happens right here, this big spike. So your stop loss moves higher. Right? Okay, cool. Now your stop loss is here. Now I want you to imagine that the next day the stock drops. Right? So when the stock drops, the stop loss is gonna come from the next day, the very next day, the stop loss is gonna be based on whatever is the highest high from the previous day's high and today's high. So it won't change, right? It'll stay the same. But let's say the next day you stay down there. With me on that? The next day you stay down there. Well, what do we say? The stop loss is going to be the highest of today's high and the previous day's high. And the previous day had a lower high because it dropped. So your stop loss is going to drop. So I want you to imagine that the market's coming down and your stop loss is already set here, but you're going to move the stop loss down, which says you're allowing yourself to take a greater loss. Why would you do that?
What are you?
I don't know. Why would we? I'm asking you.
Sense greater reward. Well, we wouldn't. I don't think why would we want to take a greater
Exactly.
risk of a loss? Yeah.
Right. It makes no sense, right?
Yeah.
So you never move your stop loss against your trade. Always only move it in favor of your trade. So it should always be to either lock in more profits or limit your loss. I'm going to repeat those two things again. Everybody hear me clearly. It should always be to lock in profit or limit loss. Right? It should never be to increase the potential loss, ever. Always in favor of the trade. Right? So if your trade is to the upside, your stop loss should only ever move up. If your trade is to the downside, your stop loss should only ever move down. Done and done. So that's why we do not change the stop loss today. Right? Let's keep going. Bank of America. Oh wait, let's see what they have to say about Netflix. I'm scared to read Netflix. Let's do it. They're trading above previous high. Okay, all right. My bad. All right. RSI is at 26. If this RSI gets above 30, we're in good shape, guys. If the RSI gets above 30, we'll be in good shape. All right. Oh, look at that. It says boundary test. It says boundary test right there. You see it? Right? Price is testing the micro trend limits for swing traders. Wait for a definitive daily session, close outside those bands, yada, yada, yada. We're about to get that today, it looks like. We're identifying a primary signal as a continuation of trend flow. Setup is aligned with a falling 20 SMA, a lower low. All right. So as a result, we should remain aligned with the primary trend while monitoring the interaction at the previous high. So we want to stay above this previous high for certain. All right. We want to, so once we get up here, we want to stay up here. Right. Pretty much. I'm going to work on getting that thing to talk better and better, guys. Am I satisfied yet? No, but we are getting there. Okay. We will get there, but no, not satisfied yet. We'll keep working on it. All right.
I'm loving it.
It's all right, right? It's okay for now.
Oh, it's better than okay. It's better than okay. It provides confirmations for what we're,
Yeah, you're right.
to do. So, yeah.
But if it's gonna be repetitive, there's certain things I don't want it to be repetitive with, like this whole micro trend limits thing. I'm gonna get rid of that, and I'm gonna try to replace it with the 5-day trend.
Well, give yourself some credit. You've done a phenomenal job. How about that?
I appreciate that. I do believe it was, I do believe it was well put together. I do believe that, like you're saying, I do believe that. I just would like for a little more clarity out of it, right? And it's not for my sake. It's I want it to be clear for you guys, right? Certain things. So because it has your trend limits here, then it says it's testing the micro trend limits here, right? Wait for a close outside the bands and talk about the micro trend bands, right? So for that, I'm just going to change that from the micro trend bands to the 5-day trend bands. Does that make sense? That's all I'm trying to say. So we're going to bring it from the micro trend to the 5-day trend. Gives you an expanded band and discusses everything from there. So, all right. Let's talk about it. Bank of America, next on the list. Good morning, Vivian. Good morning, June. Good morning. Good morning. What's up? We got there. What's up, Sammy? What's up, Ebony? What's going on, guys? All right, now let's go Bank of America. Now, XLK is now in the green, so we have a nice recovery on XLK. Netflix is now trading above or near the previous day's high. Come on, Bank of America. Just get with the program, okay? Just come. Let's do this. And of course not. All right, Bank of America, 51.30 was the boundary from yesterday. They hit a low of 51.51. Okay, so our boundary from yesterday was 51.30. All right, they hit a low of 51.51. How beautiful is that? Now, okay, I want to point something out. You guys do realize we're using the tightest stops, right? We're using tight stops here. So this goes back to what we talked about with the when the ATR is red, right? That should be a sign of momentum, right? So which direction is this momentum supposed to be going? Oh, wait, let me rephrase that. Let me say that differently. Which direction will this? Oh no, wait. Which way will this momentum be directed? That's what I'm trying to say, right? Will it be directed to the upside or to the downside? Because once you've established higher volatility, you would think that means our swings in both directions should become wider. Give me a thumbs up if that's what your thought was. That once the volatility increases, that our swings in both directions should become wider. Is that what you thought? Did anybody think that? Let me break this down for those that didn't know. Once you get to the point where there seems to be some established momentum, once you get to that point, it should become more clear where your direction is going to be. It should become more clear where your direction is going to be. So the swings in the opposite direction should actually become more narrow, right? When I say more narrow, what I mean is they should respect the tighter boundaries, because you should be setting a trend now. Okay, you should be setting a trend now. Now, otherwise, then those swings really will be wider in both directions, in which case that means you should just what? Stay the heck out of the way. Don't bother with it at all. Don't touch anything. Right? It's just not worth it. Okay, hopefully that makes sense and it's understandable. All right. So that's why tight stops on all of these things has been working. So that actually says that we have been right about what? We've been right about the direction that we think the market's going in. Now, we don't do this to be right. All right. We don't do this to be right. I know that sounds weird and crazy. What I mean is our goal is to go with the higher probability and let the market work from there. Our goal is not to play the guesswork game and try to be Einstein. Right? That's not our goal. All right. Understand what's going on in the market. Position yourself well for it and let it play out. That's it. Understand what's going on in the market. Position yourself well for it and let it play out. That is it. So we position ourselves for upside moves in financials, upside moves in Netflix, upside moves in tech. So far, this does not mean that it's been all in our favor, right? But so far, you have to consider your stop loss as your primary factor for how well your discipline is playing out. I'm going to say that again. You have to consider your stop loss as your primary factor for how your discipline is playing out. And by discipline, I mean, your way of going about, working in the market. And so if I can sit in a trade and my stop loss can remain intact for days, that starts to become, a sign that I might potentially, be on the right side of this thing. All right. So instead of saying, "Oh, I might be right," I might be on the right side of it. Right? Because I'm saying this at 10:21. By 10:30, the market could prove me wrong. So the next 9 minutes, you let your boy, what I'm talking about. You let him talk about it. And everything could change. Right. So for now, we're on the right side. We should enjoy that and just, let it play out. All right. Now, Benz, what's going on? Good morning. Sorry it took me a while to get to you there. Just wanted to just finish our analysis of the stocks that we're currently trading. Was there something that you wanted to ask?
No, Joe. How are you?
Doing all right?
Yeah, I'm just the first guy currently to join with you guys, and so interested with that. And yeah, I'm sorry for interrupting.
No problem. No interruption. I appreciate you for being here. I appreciate you for being patient, and this is by our standards, this is the least amount of disruption we've gotten from anybody we've invited to the stage that we we've not met yet. So
Yeah.
yeah, in my book, man, you're on the A+ side of things right now.
Exactly.
All right. So you guys want to go back to talking about these psychological levels and probabilities thing? Can we get back to that now, or y'all got something else you want to talk about first?
No, we can go back to that.
I was about to say, I concur.
All right. Now, we're going to do the psychological levels things first. So I just wanted to just kind of like type this in and have it break something down for us real quick here. All right. So, in the stock market, we looked at major levels. For example, as psychological levels. For clarity, what another way? Words confluence. To specific levels. But because they are using the same system, for example, using Placement. I want to focus specifically on so we're focusing specifically on the fact that the level has more potential because there are more people watching it, right? Potential. Watching it. Something else in. I do not. Actually, example. That's one. Okay. Here we go. Isn't it interesting how all of those other days, right? Bank of America was the one just giving us the juice. And today now it wants to be the one that of all days. Today is the day you wanna be the slow poke, the nerve. All right, so to address your request with the highest level of reasoning, I will first deconstruct and refine your prompt to ensure the response targets the precise mechanical and sociological phenomena you are describing. So here's what I said to it, right? And I'm just gonna. I said a lot, right? Here's what I'm essentially looking for here, right? Because there's other ways to describe this stuff, and I kind of want to just discuss it in greater detail, but I don't have all the words, so we're gonna let AI help out here a little bit. So in the stock market, we look at major levels, for example, round numbers. On indexes or the 200 SMA at psychological levels. For clarity, what is another way to describe points of confluence where many people are watching specific levels, but because they are using the same system? For example, all Fibonacci traders looking at a stock as it approaches the 50% retracement. I want focus specifically on the idea that the level has greater potential the more greater potential, the more potential. I'm supposed to say the more people that are watching it. This is something often discussed in behavioral finance. I do not want to stick with behavioral finance terminology. I want to focus on a broad study of all sources of information, looking for what we call these levels, what we call the act of many people acting on these levels all at once, or many people looking at these levels from a specific strategy, and also when multiple strategies have even more people focused on a specific level. For example, a 50% retracement and a weekly S1 being at the same level. Not looking for the term confluence, wanting to go beyond this point. Deconstruct my prompt for greater understanding before continuing. So here's the response it's giving us. So to address your request with the highest level of reasoning, I will first deconstruct and refine your prompt to ensure the response targets the precise mechanical and sociological phenomena you are describing. For prompt deconstruction, it says here that the core phenomenon you are describing, a feedback loop. We've discussed feedback loops in the past, right? Where the validity of a technical level is not derived from intrinsic value, but from the volume of participants observing it. So feedback loop. And so you guys know we've talked about this before, right? The mechanism, the transition from observation to action. When a threshold is reached, disparate actors, or those using identical heuristics execute orders simultaneously. Heuristics, this is another one right here. We talked about that before. These are mental shortcuts, right? It's above the weekly pivot, I'm in. It's below the weekly pivot, I'm out. Heuristics. So if all of us in this room have the same idea, if it's above the pivot, I'm in. If it's below the pivot, I'm out. If we all had that idea, then the stock would act in that way, right? Below the pivot, it would just, above the pivot, it would shoot. Right? Let's keep going here. So the strength of a level is a function of participant density. That's what we're talking about. And that was the part of, so basically, that was the example I gave you guys before. When I always talked about crowd surfing at a concert, that concept, that was the one I was thinking about. That's the one. Let's keep going though. All right, so you're looking for terms that describe the cumulative gravity of multiple systems, right? And then the constant checklist. Avoid metaphors, avoid behavioral finance jargon where possible, move beyond the word confluence, prove literal direct expansions for actionable understanding. We'll take it. Focal points or Schelling points, all right? Nomenclature. That was the word I was looking for the other day. I said nomer. I put nomer. I meant nomenclature. I'm gonna write that down. Let me remember that one. New word unlocked. Let's keep going. Well, not new word unlocked. I knew the word, but you get the point. So outside of standard market jargon, these phenomena are described by their structural impact on systems and the condition of collective behavior. So focal points in game theory and the study of social coordination. Social coordination. See that's why I wanted to go beyond that discussion, right? So if we're all saying if it breaks this, we're in, that's social coordination. Right? Will we agree with that, right? It's a form of social coordination. So society at large, the trading society at large has established above the 50% as bullish, below the 50% as bearish, above the weekly pivot as bullish, below the weekly pivot as bearish. Social coordination, right? A Schelling point is a solution that people will tend to use in the absence of communication because it seems natural, special, or relevant to them, right? Absence of communication. So we don't have to talk. We just know. We just know. Right? So because there's no central meeting where traders decide to buy, they look for salient markers. A round number like 200 or a 50% retracement acts as a coordination hub. Right? The level works because everyone assumes everyone else is looking at it, creating a self-fulfilling prophecy. This is something I said earlier, right? Self-fulfilling prophecies. Right? But I wanted to go beyond the term self-fulfilling prophecy to the actual discussion of it. So the level works because everyone assumes that everyone is looking at it. Right? You assume that everybody's looking at the 50% retracement. And if everybody's looking at it and the stock market can't close above it, then what does that tell us? Hola, Doreen? Okay, that was an accident. Got it. So y'all got that? Y'all catching this? Y'all picking up what I'm putting down here? All right. So everybody's gonna say self-fulfilling prophecy. You got to go beyond the words into the understanding. It works because you assume there's other people looking at it too. Let me ask y'all a question. Would you buy a stock if you didn't think anybody else in the world wanted to buy it? Or that nobody was ever going to look at it? What would be the point? Check this out, Cecily. Reflexive thresholds or reflexivity. Don't you love it? Yes, for the record, I did not expect this to be a bunch of things that we've never talked about. Again, I just couldn't find the words. So we talked about most of the stuff already. But this should help you guys understand it even deeper, though. So based on the theory of reflexivity, this describes a circular relationship between cause and effect. A circular relationship between cause and effect. Literal application. When many traders watch a 200 SMA, their expectation that price will bounce causes them to place limit orders. Oh, look at that, limit orders. Right? The presence of these orders provides the actual liquidity that causes the bounce. The presence of these orders provides the actual liquidity that causes the bounce. The reflexive threshold is the point where the observation of the data becomes the cause of the data. Wow. The observation becomes the cause. I got to write that one down. That's kind of slick, isn't it? The observation becomes the cause. The fact that you see it becomes the reason you want to do it. All right? I'm actually going to print this out, by the way, and I'm going to put it in the Telegram for y'all for later. Right? The observation becomes the cause. Go ahead, Doreen.
Later on, are you busy?
Give me 2 seconds. When you say am I busy, what do you mean? Are you there?
He probably is. Give him a second, Doreen. Hurry.
I don't think she can hear me.
Good, but
Oh, there she
whether
goes.
you guys can answer a question.
Oh, that's crazy. I've been talking to myself this whole time.
I don't know.
How long have I been on mute?
We thought you stepped away a while.
Oh,
Yeah. a long time.
how long has it been? What was the last thing y'all heard? Why y'all ain't say something? Well, I mean, for everybody else on the stream, they've been cooking.
It's been about 20 minutes.
20 minutes? And y'all didn't say nothing?
No about that.
Y'all something else.
It can't been that long, Prince. Cut it out.
I'm sitting here saying to myself, right? I'm like, why is Doreen asking me if I'm busy?
You've been on mute for a long time.
Wow. Why y'all ain't say something? You see, now you're gonna have to watch the replay.
Well, I have a question regarding this. It's not something that you guys discuss, but I'm trying to understand, the logic of everything that's going on. So here's what I'd like your thoughts on.
Wait.
I
Wait. I was on mute, so this whole time I've been breaking down what we were supposed to be talking about. So
I'll watch the replay.
okay, go ahead, Doreen. But I'm still gonna finish. I'm still gonna finish it up. But go ahead, Doreen.
see anything happening on Twitch, just frozen. So I just look sometimes because you might be busy. Anyway, question. I have an option that I got into this position in December 26th for Bold. And I've been watching it and it's been going fine. So now I'm trying to understand. I'm looking at the pro COVID indicator. And basically right now I'm just looking at it. Everything is green, everything is up. This is however, the RTI is getting really high. So I'm just saying, okay, this is a good time for me to close out of this position. It's like 200%. And so I'm thinking, but I'm looking at this, and the only thing that is really, I look at the chart and I see where the RCI is. I know that it's high. I know what percentage it is. I know how long I have it. And I'm saying, is it just good because it's 87% RSI is an indicator for me to say it's time to get out of this option?
You can look at it that way if you wanted to.
No, Duran, that's not the answer.
No. I'm not done.
Okay.
You can look at it that way if you wanted to. That's one idea. But if that was the case, then you'd have been out when it hit 70. Right?
Right.
So maybe you set another threshold, like if it falls below 85, or if it falls below 80. Right? On the other side, then that's a sign that it's starting to weaken, right?
Right. Yeah. This is the weekend.
Right.
So it's like it might be a good time to just
Okay, there you go. Now that's a better reason than over 80, right? A better reason would be it's the weekend and I don't want to hold that risk over the weekend.
Yeah.
That's a good reason to get rid of it, right? But I would never do it just because it's over 70, like, and we're talking about in the case of gold, where you're at with gold. I'm not talking, so for other things, gone. I'm out of there. Right? But gold right now this is clearly not a technical rally. It's a fundamental one, being driven by institutional activity and the need for central banks to accumulate. So there's no sitting here saying here's exactly where it's going to stop. You can't say that for most things anyway, right? But in this particular case, to want to get rid of the risk over the weekend sounds like sound reasoning to me. That's great logic to me.
Okay, sounds good. All right, thanks.
No problem. And then of course you can always look back the next week and look for pull back to one of these key levels here or something.
Right. Right.
You can always pick up another trade. Remember what I always say though: if you're gonna pick up another trade, pick up one with that's worth less than the one you got out of.
Oh yes.
Right.
Yes.
That way, it keeps some of that money in cash.
Yeah. Yeah. Okay, sounds good. I'm trying to understand. I know I understand the logic and everything. Just trying to see if I can make it work.
Definitely. That was great logic. Like I said, so for something like for what's happening with gold right now, you don't use the RSI theory. You use the weakening of the RSI theory. Right. So if you were going to use RSI, use the weakening of it. So like I said, you can use different thresholds. I would use 85 or 80 if I was going to do that.
Okay, sounds good.
Right. But by the time the day is closing out, the greater logic you had today was holding the risk over the weekend and wanting to get rid of that risk. That was the best logic.
All right, thanks.
No problem. To recap a little bit of what I've been saying over the past couple of moments, however long that was, he says it was 3 years. Let's keep going. So one of the ways to look at these things is the focal points, right? And as they talk about self-fulfilling prophecies, one of the things it suggests is that the level works because everyone assumes everyone else is looking at it, right? I think that's the beautiful thing, right? Everyone assumes everyone is looking at it, right? So, for example, the stock market is hitting the 200 MA or about to hit the 200 MA, right? Do you assume that nobody's looking at it, or that most people are looking at that? What's your assumption? Right? You assume that most people know this is about to happen, or a large number of people know this is about to happen, and that's the reason it works. Okay, that is literally the reason it works. All right, so the level works because everyone assumes everyone else is looking at it, and that's how you create self-fulfilling prophecies. And so using the 200 SMA is another example here. I was saying, Cecily, they actually said reflexive thresholds, and based on theory of, get this, reflexivity. So this describes the circular relationship between cause and effect. All right. So when many traders watch the 200 SMA, their expectation that the price will bounce causes them to place limit orders. What have we been talking about recently? Right? These limit orders, right? And this is exactly why we've been talking about it. This is how this works. So the presence of these limit orders provides the actual liquidity that causes the bounce. I heard that. The presence of those orders provides the liquidity that causes the bounce. So the reflexive threshold is the point where the observation of the data becomes the cause of the data. The observation becomes the cause. The fact that you were looking at it becomes the reason why you're doing it. And so the fact that many people are looking at it becomes the reason why many people are doing it. It's a cycle of cause and effect. Right? Now, order flow imbalance clustering Check this one out, Anisha. This one is good. So from a market microstructure perspective, these levels are called liquidity clusters or order densities. Mm-hmm. Notice how I always say demand below, liquidity above, that kind of stuff is what we're talking about here. So if a Fibonacci trader, a pivot point trader, and a trend line trader all identify 191 as their trigger, they all place orders at the coordinate. This creates a literal wall of capital. A literal wall of capital. All right, this creates, so what do we call it? Call walls, right? Put walls, those types of things, right? So walls of capital. This creates a literal wall of capital. When price hits this level, the act of many people acting at once is a concentrated execution event. A concentrated execution event, like that one. Let's write that one down. Concentrated execution event. Okay? So the level isn't psychological, it is a high density zone of pending transactions. And that's pretty much what I wanted to say there. That's why I said I wanted to go beyond psychological. Because everybody always talks psychological. It's not always psychological. In fact, most of it's not psychological. Most of this is not psychological. I repeat, get out of the psychology train, right? Just jump off that train. Most of this stuff is not psychological. All right? This is a high density zone of pending transactions.
Well, good morning, guys. I just want to say that really quickly.
Good morning.
Address the space. But yeah, I'm gonna wait my turn just to see what you finish. See what you're talking about, because I wanted to address with you that you put it together yesterday.
Okay, gotcha. Give me a few moments here. We're gonna finish this up and then we'll talk. All right. So just writing this down. Psychological. All right.
But yeah, I agree with that whole thing too. Like the whole psychology thing is like, it plays a part, but don't make it the all in all. It's not the all in all. The all in all is your skill, and your technicals, and your fundamental trading.
Right. But now, so just to give you a brief, so this isn't more like is it psychology, or is it your skill that gets it done? It's more so we're talking about so imagine multiple people watching the same level, and so because they're watching that level, they all decide to place orders in that area. So a lot of people would say, oh, that's psychology. It's not, right? So what we just described here is it's a concentrated execution event, or a high density zone of pending transactions, right? So a lot of people, so what people call liquidity zones or liquidity pools, or essentially when the market just kind of dips into that liquidity or bounces into that liquidity and moves from there. These are right. These are zones of pending transactions, because the transactions were there long before you got there. Right. A lot of times people already said, "Hey, if we hit this level, I want to do this." Right. And that's because of strategy, right? Strategic placement. All right. Now, convergence of heuristics. Mental shortcuts is what I was talking about before, right? Heuristic convergence. I like that one. Right? I'm not going to start using these words now, Anisha. You got don't worry. Or maybe I will. Heuristic convergence. If I start saying heuristic convergence, Anisha, we no.
Rolling my eyes already.
Heuristic convergence. So it's a convergence of mental shortcuts, is what they're saying, right? So multiple mental shortcuts are all in line here. So for example, right? Anisha says, if we close above this 50 MA, I'm in. Right? Let's say the 50 MA is at $200.56. Shay says, if we close above 200, I'm in. All right? Alicia says, if we close above the weekly pivot, I'm in. The weekly pivot is at 198.80. Justin says, you know what? If we close above the previous day's high, I'm in. See what's going on here? Right? Moji says, if we close above last week's high, I'm in. So on and so forth. These are all mental shortcuts. They become mental shortcuts because you have your reasons for them. Mental shortcuts aren't just decisions that have already been made. They're decisions based on already proven, already data-driven facts, right? So you know above the weekly pivot is bullish, for example. So that's why you want to buy, right? And that's something that you can draw back on, like data from studies and whatnot, right? So this is a heuristic convergence or a coming together of mental shortcuts. So all of you guys have your mental shortcuts, but they all line up in the same area. So based on what I just said, Alicia would be the first to buy because she said above the weekly pivot, and that was at what did I say? 199.86 or something like that, right? So she'd be the first to buy. Then her buying pushes it to where Justin wanted to get in, right? And to where Shay wanted to get in. And then Anisha sees all this happening and she says, oh, well, there it is. Does she really know that it was Alicia's mental shortcut that led to Shay and Justin that led to her? You see how that works? That's how when you that's how when you do these things, you can have your confidence in these probabilities and all this stuff because, like when was the last time y'all saw me look at the chart? Whoever's on happens to be on the stream, or I've been on this pro pivot indicator this whole time. I haven't even looked at the charts in a little while. Bank of America could be collapsing right now for all I know. But what do I have in my corner? Right? I have the boundaries of the market and my mental shortcuts. So either way you put it, my thought process is very similar to what we're talking about right now, that most of the market may be looking at certain things that then supports what I'm looking at. Is that fair enough to say, y'all? Y'all let me know. Let me repeat what I just said, right? So the reason I'm not just running back to my charts and looking at my charts every 10 seconds is because my thought process is that the rest of the market is likely looking at things that supports what I'm looking at. Does that make sense to y'all? And does that, is that fair enough to say?
Yep.
Yeah, that makes sense to me.
Yeah, if I would have did that, I would have made the right decision yesterday.
It's all right. Listen, we all have to, Justin. We all have to make that one decision once that makes the next 20 decisions. See what I'm getting at? Like if you don't make that one decision, then someday you'd have made the same decision anyway. And better it be yesterday that brings you to today where you can talk amongst it with your fellow traders and understand it better and see all these different things than on one day when you're in a vacuum, and it kind of doesn't really mean anything to you at that moment. But we always have to make that one decision leads to the next 20. So the next 20 times this happens to you, you're gonna be like, You're not gonna be like, oh, it's not always gonna be, I remember that last time. It's just gonna be, I'm trusting my framework now. I'm trusting my framework. I'm trusting my framework. I'm trusting my framework. Right? I'm working with the boundaries.
And I think that kind of comes or when you know, when you know more of that framework or knowledgeable about what you're doing too. So I think all of that comes over time.
Yeah, I 100% agree. Right? Like, you end up having done it enough times where you're like, or at least studied it enough or spent enough time in the market, right? And it just starts to add up. I'm going to read this last part right here. It says, why density equals potential. The potential you mentioned is literally the depth of the order book. A level with only one strategy has thin liquidity. A level where the 50% Fibonacci, the weekly S1, and a major round number align has deep liquidity. Actionable understanding comes from recognizing that these levels are nonlinear. Doubling the number of people watching a level does not just double the strength, it often increases the volatility and success rate exponentially because it triggers a liquidity vacuum. That's crazy. Vacuum once the level is breached or defended. Okay? Does anybody have any questions about anything here that I just discussed? Again, I'm going to print this out into a PDF and send it to you guys. But does anybody have anything that they want to, ask about anything that I just talked about here at all? And later on tonight, for our session, we're going to go over this part right here. Right? How these liquidity clusters specifically behave when they are broken, right? Failed levels versus when they hold. All right. So we're going to discuss this tonight as well. And then so I'm gonna see so Shay, you are you there or no? All right, well, I am going to set up this this probabilities test real quick. And have us a little fun. Microsoft is up 3.6%. So we did say they were going to bounce back above the 200 MA, right? There you have it. But look at Bank of America, the nerve. But we were up so much on Bank of America that the appearance here is that if we lose, it'll be a very small loss. So we'll take it. It is what it is, right? Let me set up this let me see here. Okay, so hold on, let me talk to my Gemini real quick. First, I have to stop calling it 191. 1 second here. You had to get them straight real quick. Because Gemini kept bringing up my point of control, but it would say $191. Cecily, what's going on? How you get up here? Cecily over here pocket dialing, y'all. Because I'm pretty sure she raised her hand on accident, and now I'm pretty sure she up here on accident. All right, Cecily, watch out now. Don't be up here pocket dialing at work. Let me see here. Okay, there we go. Oh, nice. Okay. Hell, they just keep coming with more and more. I just have to keep saying yes. I'm gonna be able to build a whole study guide out of this for y'all. Sure. Gemini just keeps asking me to add one more great thing to the. Let's map out a price map that connects the PLC to no. Okay, now finally we've hit a point where I'm like, no, thank you. Let's see. Social. Like me. Thank you, buddy. Let me see if Gemini remembers how this goes. I absolutely remember. This is a classic way to demonstrate how we measure spread or variance in population. To honor your request, to keep the responses distinct and move into a new realm. We will rerun the standard deviation height session, focusing on literal mechanics. We have 5 students standing from the classroom. We measure their height in inches. Okay. I want. How many students we want? 20? Y'all want 20 students?
Yeah, let's go with 20.
All right. So I want 20 students. Random heights. Also, so now each time, let's see, starting this student. Here. When I say begin, we'll name the first student and tell us their height. Oh, wait, hold on. Wait a minute. This. Try version. Let's just do this. Okay. When I say begin, we will name the first student and tell us their height. We'll then tell you next. And then we'll continue to name colors to name all. Come on, start with the second student. Hey. Okay, here we go. So I understand the instructions perfectly. I'm generating a population of 20 students with names and heights based on standard statistical distributions of school age population. Right. Do y'all want the heights in is it okay to have the heights in inches? Y'all fine with that, or should I ask them to put the heights in like feet and inches? Should I leave it in inches only? Okay, so we'll leave it in inches only. This is the master list. So the standard deviation is 4 inches. Let's write this down. All right, for those that are joining us for the first time, this exercise is actually meant to help you as a trader. So don't take it for granted. All right, this exercise is meant to help you as a trader. It's meant to help you understand how statistics drive all returns in the market. Right, and so if you can, and so we're gonna all grade ourselves here. We're gonna all grade ourselves here. Okay. Now, if you're doing this for the first time, you're going to how do I put it? You're probably going to start off, on the slower end, or maybe you won't, right? But I'm going to explain it carefully. So the average height is 66 inches. Okay, the average height is 66 inches, which means that the average student, that's how tall they are. Now, 70% of students are within 1 standard deviation of the average height, meaning this 4 inches is standard deviation. So that's the average amount that a student is away from the average height, right? Or deviates from the average height when they do deviate. So that means 62 inches to 70 inches is the 1 standard deviation band, or they call it 1 sigma. Right now, 95% of students are within 2 sigma or 2 standard deviations. Okay? This means that 95% of students are within 8 inches of the average height, meaning almost nobody in this classroom, is going to be more than 8 inches taller or more than 8 inches shorter than the average height. Okay, so that means between 58 and 74 inches. 95% of people in this class will be in this range. I did not notice that. So the women, well, Olivia's 63. Well, yeah, you're right. Sophia's 64. I mean, they're pretty tall. You got some tall women here, but that is interesting though. All the women are below average height, most of them. I don't see any women above average height. That's interesting observation, Anisha. Isabella's average height. Look at Isabella. Check her out. All right, we see you, Isabella. Now, to top this off, 99% of people in this class are going to be within 3 sigma. So this pretty much covers everybody in the class. Okay, so that means 99% of these students are going to be within 24 inches of the average height. I repeat, this means that 99% of students are going to be within 24 inches of the average height. So that means within 54 to 78 inches. Okay, within 54 to 78 inches. So how does this work? If 99% of students are going to be within 54 to 78 inches, that means that when I hear somebody is 79 inches tall, there's a higher probability that the next person is going to be shorter than them. Okay, so anytime somebody comes outside of these bands, you start to realize that the next person must be shorter, right? When somebody is below average height, how far below average height are they? Right? That'll give you an idea of whether or not they would be, whether or not they would be more likely taller. Now, why does this help with your trading before we really get started here? Why does this help with your trading? This helps with your trading because it helps you understand when the market deviates far from the average. Right? When the market deviates far from the average, you start to see a greater probability that it's going to come back to the average. Okay? So if I put a moving average on my chart, let's say I put a moving average right here. Right? So then all these times where the market comes back, it comes back. It comes back to the average. This is where your average would be, right here. And this is the market falling away from it and then coming back to it. That's exactly what's happening, whether you know it or not. Every time the market bounces from these points, it is likely to come backwards a little bit, back towards the averages. Right? Yes, Anisha, like gold, for example. Definitely, that's why I told Doreen, her logic about getting rid of it over the weekend, extremely good logic, right? Because there's a high probability that it starts to come backwards towards the average, even if just for the moment, even if it doesn't make it to the average. One of the biggest reasons it starts to come back is because of how far it is away from it. All right. When calling a student, also mention simulation average. All right. And deviation. All right. Let's begin. Now the goal here, is to really understand probabilities, right? So you're going to keep your score. So I'm going to ask you guys whether you believe the person is going to be taller or shorter, right? I'm gonna state mine, out loud. You just mark. You just keep track of yours and just keep a tally. When we're done, you tell me how many you got right. Okay. So I'm gonna state mine out loud. You take your tally. All right. So I go wrong and right. All right. Now, the goal here is to see how. And Shay, I was looking for you a second ago. I guess you can just kind of give us a second to finish up this little exercise right here. The goal here is to see how many, what percentage of the time you can be right about the next move. So I'm going to explain it from this point here. So the first person we have is Logan. Logan is 70 inches tall. All right. And that is 1 standard deviation away from the average. So what you're going to do is you're going to say, is the next person likely to be shorter or taller than Logan? Okay, that's what you're going to say. Is the next person likely to be shorter or taller than Logan? I'm going to go with the next person is going to be taller because Logan's right on the edge of the first standard deviation. Right out the gate, I can certainly be wrong about this because 1 standard deviation is not a statistical extreme, right? It's 2 standard deviations and 3 standard deviations that makes it so much easier to be right, okay? So really, in the world of trading, and forgive me for just, kind of digging into this a little bit here. So in the world of trading here, pretty much you have all the big bets that you're likely to get right. And all you need is to get some of those smaller bets right. in order to improve your percentage, right? Because you're not always going to get the highest probability examples. So sometimes the market is just right there and you have to make a decision. Other times the market's looking like gold and that's an easy decision. Okay, does that make sense to you guys?
Yes.
Okay, so this is one of those more difficult decisions right here, where it's at 1 standard deviation, and that's only a 70% probability of staying in that range. So I'm gonna go. The next person is shorter than Logan. Here we go. Next. So you guys guess what you're gonna guess, and when you get the next one, just mark down whether it was a win or a loss. So we put win or loss, not right or wrong, but win or loss.
Excuse me, I thought you said Logan was going to be taller. You changed it to short?
No, right. If I say Logan's going to be taller, that means the next person's going to be shorter. That's what I'm saying. You see what I'm saying? So I'm saying the next person's going to be shorter than Logan. So, all right, here we go. Next. The next person is shorter than Logan, 64 inches. Okay. So that's going to be 1 in the win column for me. All right. And so just for the record, this happens with the market. You understand what I'm saying? This literally happens with the market. Now, the next person is Sophia. Now remember, it is, let me see here. Average is 66 inches. Standard deviation is 4. Okay. So Sophia is, right there, about a half standard deviation. But she's actually slightly outside of that standard deviation band. Right? So do we expect the next person to be taller or shorter? Ay caramba. I'm going to go with the next person is going to be taller, but I am going to make note that she's slightly outside of the half standard deviation. So, next person actually might be shorter, but I'm going to go with the next person is taller. And as you can see, the next person is taller, 70 inches again. Oh, they call random. So remember, Logan was to be called at random, right? So Logan is scratched off the list now. All right, so there we go. Here we go, next. All right, the next person. Oh, I didn't call it. That's my fault. Well, I would have said shorter anyway, so I lost that one. I would have said shorter. So I lost that one. All right, so James, 72 inches, 1.62 standard deviations. I'm going to say the next person is shorter. Give y'all some time. All right, I'm going to go with shorter. All right, next person was 65 inches. So I win that one. So far, I've won 75%. So far, I've won 75%. And that's how this works. Just like this, just like what's happening right now, this is how this works. Okay? So that's all I need to do is look at what's happening in the market and weigh out the probabilities, and then we go from there. Okay? So let's see here. The next person, taller or shorter, they're almost average height, so there's really no way of telling here, seeing as they're almost average height. I'm going to go with the next person is... You can go with shorter. Bingo, got it. Shorter. Right? Now, let's see here. So for Benjamin, he's 60 inches. I'm gonna go with the next person is taller. Let's just run through this. All right, let's run through it. All right, next person is taller, 68 inches. All right, so far I am 5 out of 7. Okay. So let's see here, 68 inches. I'm gonna go with the next person is taller, actually. This time I'm gonna go with the half standard deviation breakout, right? I'm gonna say the next person is gonna be taller. Ooh, next person is average height. I lose. All right. I'm gonna say the next person is taller. I'm going with taller again. 62 inches. Next person was shorter. I lose again. So now it's evening out. Now I'm 5 out of 9. Right? Guess what I'm gonna do? I'm going with taller again. Somebody tell me, why am I going with taller again after I just lost 2 in a row at taller? Why did I do that? Let's talk about the psychology of what I just did there. Now we can talk psychology. Why did I go with taller again?
Your probabilities higher now that you lost twice.
Bingo. Yes, exactly. Not like after those 2 losses, my probability of being right actually went up. And what do people do? What do people do, Cecily? They actually start doubting themselves after those 2 losses. And what do they say? They start saying, "Oh, you know what? I'm probably wrong, man. I'm gonna go with no, don't do that." Right? Your odds are going up every time you're wrong. Your odds of winning actually goes up. You can't lose every trade. That's impossible.
Especially if the market only goes up, down, side.
Exactly. It's impossible to lose every trade. Now, 67 inches. Now I'm going to say the next person is shorter, and I'm probably going to lose that one. Who knows, right? Next person is shorter. 62. I was correct. 62 inches, 1 standard deviation, right at the band. I'm going to go with the next person's taller. 73 inches. That's almost 2 standard deviations.
How do you fully build confidence, though? I mean, I don't know. I guess I'm just, with some things, I'm like, I want to be like black and white. This is still like up to your interpretation. And then to me, it feels like it's just guessing.
No.
I feel lost. I don't know. It just feels like guessing.
Right. So if it was guessing, then obviously I wouldn't sound as confident, right? So let me break it down like this. Focus on the bands. Focus on the bands. And even when you're in between those bands, like I'm talking like basically you're almost at the average. You lean on something else in order to help you understand that. What did I lean on? I leaned on the fact that we were outside that half standard deviation. Let's go back to the pull pivot indicator. Hello, remember these? Low range, high range? Remember those? I just did the same thing with this. I leaned on the half standard deviation band. We were slightly outside of that to the upside. So I said, I'm going to go with taller, even though we were on the outside of that band. And so basically I went with momentum right there, Anisha. And I ended up being correct.
Okay. So I guess it kind of goes back to like, if I think about myself 5 years ago when I didn't know anything about the stock market compared to today, I guess it's just knowing, over time, we kind of just knowing some different things, and then you can interpret a little bit more sounder and be more confident.
That's really all it is, right? So no, it's not guessing. It's making the proper assumptions.
I get it. It just feels like guessing though, but.
So, okay, let me ask you a question, right? If you pull up a stock right now, it's at the third deviation, right?
Mm-hmm.
Are you buying the stock?
Third deviation, yeah.
Not the third deviation. I'm talking third deviation to the upside. I'm saying. So,
Oh no, I'm not buying it if it's to the upside. I'm waiting.
okay, so you notice what just happened there? If when you thought it was to the downside, you said yes, absolutely. When you realized it was to the upside, you said no.
If it's to the upside, I want to get to going down like IWM.
Right.
So,
Right there, you weren't guessing. See that?
okay,
So
it's helpful.
so here's the reality, right? Here's the reality. What you're doing right then and there, Anisha, is you're saying what you won't do, not what you will do. And that's what we're doing here. So we're saying this guy is 73 inches tall. Will I bet that the next person is taller than him? If you had to put your money down right now, would you do that?
No. Yeah. Taller?
Right.
No.
Would anybody put their money on the next person's taller?
No.
Okay. Now, to put your money on the next person being taller is guessing, Anisha. See how that works?
Yeah.
That's guessing.
Yeah. And I guess it's just a shift in the mindset too, which I can say that's definitely better than it was when I didn't know anything.
Right, definitely. You know, like so now what I'm looking at here, right, is if I'm at 73 inches right now, I'm at 73 inches. And that's just about 2 standard deviations, almost 2 standard deviations. What I'm saying is I won't put my money on the next person being taller. So my assumption would have to be that the next person's going to be shorter. So it doesn't start with here's what I want to do. It starts with here's what I won't do. Here's what I won't do, and I'm going to break that down for the next ones that keep coming up. I'm going with shorter on the next one. You guys can keep marking yours down. Wait. So that's 5, 7, 8, 9, 10, 11, 12. All right, on the halfway point, right? I am 8 out of 12. What are you guys looking like right now? Let's take a pause for a second. I'm 8 out of 12. What are you guys looking like so far?
9 out of 12.
9 out of 12. Look at that. Beating me. See that? What you got? What y'all got?
You know I ain't doing the homework.
Oh, all right. That's fine. Anybody else got it? But all right. All we need is one, though, Anisha. Anyway, we only need one.
Okay.
Yeah, it's as long as one person does it, it gives an example because notice Alicia's doing better than I am. That's the perfect example. Right there. Right? Think about that. That is the perfect example. She's at 75%. Serene?
8, but I'm really looking at the percentage standard deviation as opposed to worrying if it's short
It's all right.
or taller.
It's all right.
If it's positive, I'm like, okay, likely if it's going up is less, it will probably be going down. So that will be short.
Nice. Now watch this, Serene. That's all right, because get this, right? There's a reason I'm asking you where you are right now. Because one thing I've noticed about playing this game right here is that it usually always improves towards the end. You with me on that? So
Yes.
right now, you said you're 8 out of 12. I'm 8 out of 12 as well. All right. So that puts us at what, 66%, and Alicia's at 75. Okay. So let's see how things play out towards. So for me, the next person is shorter. All right, here we go. All right, the next person was certainly shorter. All right. Now that is 9 out of 13. Now, here's the thing, right? Let me break this down again. So if we would have been wrong about the next person being shorter, that gave us a higher probability of being right about the next person being shorter. So every time I lose, my confidence actually gets greater that I'm going to be right the next time. Does that make sense to y'all? Y'all understanding this?
Yep. Because I'm not gonna say I have no clue, but I mean I'm just That 65 inches is,
We're gonna talk about that. We're gonna talk about that. I'm gonna break that down right now. But I was about to say, think of Bank of America, for example, where we're testing the boundaries, and you know, this could be a potential loss right here, right? But I am certain that Bank of America is at a statistical level where the odds of them going up should be greater. Same thing that we did with Netflix, right? That's exactly what we did with Netflix. What we just did, we did that with Netflix. I said, no. The odds just got greater of us going up. And now where are we with Netflix? See, we did the same thing. The one thing you guys can always bet on is if I'm teaching you something, it's something that I do, it's something that we use, we will use it.
But why sometimes when the odds are like they're down so much, why not just, I do like how you shared the other day, just go with the wise stuff. Because then it's like, okay, if we get to that level 50, 62, 80% is at 50, 33. We definitely should be, well, I would hope probabilities of going back up is, I think, more higher.
Right. And like, so the whole thing about the tight stop versus wide stop, we're going to go back around to that when we're done with this exercise. And I'm going to break that down even further. But watch this, right? So this 65 inches thing. So we talked about the momentum a second ago, right, Alicia? So is this momentum carrying us to the downside? Really? No. Because where's the momentum lie? The momentum lies, right, in getting a half standard deviation on the other side, right? So I could be wrong. However, I think the chances of the next person being taller is greater. Now, I could try to memorize, well, there was a lot of tall people already called, and you know what I mean? I could try to do that. I could try to play that game. That's where we get into guessing. Like Anisha was just talking about.
it makes sense.
Right? So I'm not going to try to play the let me remember. Oh, no. Listen, what happened is we reverted back to the mean. This was a mean reversion. Right? Now, it did carry us below the average. So that actually says to me, you know what? Maybe I will, go with a shorter there. So those are my two options, right? Hey, let me give you two options when this happens. It went from 2 standard deviations to at the average, but slightly below it. So your two options here is one that being below the average, coming from where we were, says that you may have another one below average coming, right? And the other option is that you went below average, but with the lack of momentum. So I'm gonna let you guys decide which one you do, but neither of those would be guessing. Both of those are based on how this thing actually works. As long as it's based on how it works. Okay? So I'm gonna go with the logic that there was no momentum here, and I'm gonna say the next person's gonna be taller. You choose what you want to choose. I'm gonna go with there was no momentum in that move lower. 69 inches. What you know about that? All right. All of a sudden, I'm 10 out of 14. Now, we are just below. We're just below 1 standard deviation. I'm going to go with the next person's going to be shorter. Because I'm going to say that we essentially went from just below the average to not even being able to touch the standard deviation band, which says that was a weak bounce. Look at how I'm playing. I'm playing it just like we're trading, right? So that's a weak bounce. Let's talk about it. So I'm gonna go. So next, I'm gonna say the next person is shorter. Here we go. And they were shorter. And look at that. It was not able to get to the 1 standard deviation on the other side. What am I going to choose? All right, I'm gonna let y'all tell me which one. What am I going to choose based on what I just said? They dropped, but they weren't able to get to that 1 standard deviation band on the other side. I'm going to say the next person's taller. I'm gonna go with it. All right. Next person's taller. Oh, there we go. I'm wrong on that one. All right. You know what I should have went with as I thought about it? I should have went with it actually failed on the end on one end and went to the same point on the other end. That actually was a strong move to the downside. I should have thought about that. All right. All right. So now I have 11 and 5. All right. This person is 61 inches. 61 inches. So they're just outside of the 1 standard deviation band. I'm going to go with the next person is taller. Okay. $64 inches. Now it brought us back up to this point. I'm going to say the next person is taller again. 64 inches. A half standard deviation out. So I'm going to say we're going to complete our journey to the average. That's what I'm basically saying. We're going to complete our journey to the average. That's my thoughts, pretty much. To the average or slightly above it. Here we go. There you go. Slightly above it. You see how that's working just like trading, Anisha? And the things that I'm saying are actually happening in statistics and data. It's not even a chart here. There's not even a chart here, and I was able to tell you it's going to continue either to or slightly above the average. All right? Okay. This one's very interesting. This one's very interesting because I think we're in a range now. You know, I think we're kind of in a range now. I think it seems like we've been ranging around the average, right? So I'm going to go with the next person is shorter. Ooh, 71. You know what's crazy? So did I just make the same mistake twice? Y'all saw that? I just made the same mistake twice, right? What mistake did I make? Twice. Who can point it out? And that's not calling it a mistake. I had the same oversight twice. Can anybody call it out? Well, the last time it went from 81 to the upside to 81 to the downside, or 0.81 to the upside to 0.81 to the downside. I said, you know what? That was a strong move because it went from the same point to the same point. Basically, it failed here and went all the way to the opposite end. That was a strong move. I should have said to the downside. This time it went from the same point to the downside to the same point to the upside. And I said the next time I would, you know, I would go with that. I didn't, right? But nonetheless, what did it just do? It still just kind of proved me right. At the same time, it still kind of proved that my logic was on point. So you got to think about that. All right. So that still says that, okay, D, if you see that, then you know what to do. Okay. Now, I'm gonna say the next person is shorter, obviously. And I'm correct. And that's it. That's the last one. That was the last one. Okay. So I scored a 14 out of 20. What about you, Alicia, Doreen? I scored a 14 out of 20.
I think I scored only a 10.
Okay, 10 out of 20.
When I'm looking at Sigma, when it's negative, I'm thinking, well, maybe it would continue to go down because maybe that's my logic is wrong. If I'm thinking of like the stock's still going down, and then when it starts going up, like it's like 1.35 or negative 0.35.
Yeah, remember I gave instructions before it started. So yeah, you were looking at it the wrong way. Again, if I'm a certain amount away from the average,
Yeah,
your thoughts are supposed to be coming back,
right,
right?
right.
So we do an exercise another time.
Yeah.
And you try it again. It's all good.
Yeah. Hey guys, I have to run, but this was very interesting. And you know, Duran, I think I experienced this once before.
Yeah. We tried it before. In which case, you actually scored much higher.
Right.
I remember that.
Take care.
All right, catch up with you later. Alicia, what'd you score? 17 out of 20. Y'all heard that? 17 out of 20. Now, you think she could score that high if it was guessing? Anyone?
No.
Impossible. There's a logic to it.
Yeah, I'm gonna take a probability class now. You twisted my arm. Like I think about my daughter, she can see patterns and different stuff like so easy. Or like, and then I think about when I was in school too. I didn't like the word problems and stuff like that, but it was like had I been taught a little better or different or a different way, maybe visually, I would have been more stronger in that area. So
Yeah.
I just got some work to do.
Yeah, I can agree with that. Now check this. You ready for this, Anisha? I scored exactly 70%.
Nice.
Alicia scored 85%. Right?
And throw her pockets big over there.
Hey, you know it. I was about to say that's how you know who the GOAT is. That's how you know who the GOAT is. All right, we see you.
I love statistics though, so
Yeah, it's excellent stuff.
awesome. I'm gonna get there one day. Oh, you there. Stop it. Cut it out.
I think she means her understanding of the probabilities part. I think she means.
And having trust in it. Now it doesn't feel as much as a guess, but it's kind of like just with your knowledge that you have. So I do know that the more knowledge you have, the more understanding you have, then you can make a sound probability versus just guessing.
Right. And you know what? Also, so because of that knowledge, I know why I'm wrong when I'm wrong.
Nice.
Right? I was having a conversation with you guys know Zachary, right? That comes in here from time to time. I was having a conversation with him yesterday.
The one that you said has a huge vocabulary.
Yes, right? And I said, Zachary, you know, because he was talking about, you know, kind of like studying his trades after and so on and so forth. I said, let me ask you a question. I said, don't you feel like you already know why you lose when you lose? So, you know, right? So we had that conversation. You know, I'm not going to dig back into the whole conversation. I'm just saying it was a topic yesterday, right? And so, and that's kind of what I was saying about that particular, you know, room, quote unquote. Anisha is like, I go in there to talk to people like Zachary, you know. The other people are just a consequence of wanting to talk to Zachary. But like, the point is, right? So when you lose, right? When you lose and you're actually betting on the odds, all that means is something irrational just happened. Does that make sense when I say that?
Yeah.
I know somebody else is being irrational. Sit your behind down. No. I'm sorry. Give me 1 second, man.
run this new entity, and that new entity would be in charge of overseeing U.S. data under Oracle's leadership. So it's a very similar arrangement in that sense. The thing that's sort of not clear here, though, is that the law also says there can't be any sort of operational relationship between the U.S. entity and ByteDance. And there's, when you read through the materials, we don't have the actual contracts here, but when you read through the press release, it doesn't say much at all about limiting any sort of operational relationship between the U.S. entity and ByteDance. That was really an animating concern. So I'm not sure that they've checked all the boxes in that sense, but there are protections here. This is a U.S. entity under Oracle's leadership checking on this data.
Does this arrangement have any precedent for some of the other Chinese companies that operate in the U.S.? I'm thinking like an Alibaba or a Tencent or Baidu. Does that have any application?
You know, it's really difficult to say that this is anything more than a one-off. This you know, the TikTok situation sort of drove a unique pushback. It was a strange situation where Congress was aligned on this, and we had Democrats and Republicans joining together saying, absolutely, we need to ban this app unless we fix this. And you haven't really seen anything like that for other apps come together, and especially with President Trump pushing back on this, that really discouraged lawmakers from stepping up on this issue. So I don't really see a lot of read-through to other companies right away.
So this new entity, it's got some private, I guess, equity, or American investors, private equity investors. Where does the value accrue here? How does that work? Is there going to be an IPO of this U.S. business at some point, or will it just stay privately held, do you think?
You know, it's really tough to say. We've had some reporting that suggests there's a revenue share arrangement that you know goes for all of the TikTok data going forward, but it really unclear. You know, we don't have the terms of this arrangement and how it plays out going forward. So a lot of missing details on questions like that, and we're kind of reading between the lines on the press releases. What we know here is this follows the law in the sense that ByteDance ownership falls below 20%, as that was a key term in the law. It's not clear that it goes beyond that. You know, obviously ByteDance would still own the algorithm here, which was a big driver, and so this new entity doesn't own, you know, the most valuable piece of this business. So that, you know, that definitely limits, you know, future returns for this new entity.
All right, Matt, thanks so much for joining us. Always appreciate it. Matt Schettenhelm, he is the media litigation analyst for Bloomberg Intelligence. He's based down there in Washington, D.C. We turn to all things, you know, media space, which is a highly regulated business, the TMT space, with the Federal Communications Commissions, among others, and it is highly regulated. So Matt kind of helps us dig through all that stuff, and he has certainly been busy with this TikTok and the ownership of TikTok and ByteDance. Right now, for our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. Your top stories and global business headlines are coming up in just a moment. Take a quick look of the tape here to close out this morning trading session. S&P up 7 points. The Dow is minus 255 points. That's a 0.5%. The NASDAQ, it's up 110 points. That's a 0.5%. So red and green, no real direction there. Looking at this interest rate space, 10-year Treasury yields pretty steady here. Let's call it 4.25% there. They had been rising over the last 4 or 5 trading days. I'll tell you, there's some action in the oil space. WTI crude oil, it's up about 3% today. $61 and change. That gets your attention. Gold, yet again, it's higher, up $40, rated just $49.80. We are on that 5,000 watch. We'll have more coming up from Bloomberg. This is Bloomberg.
This is CBS News on the Hour, your home for original reporting.
I'm Steve Kathan. Snow, ice, plunging temperatures, all factors in a storm system that figures to make life difficult in much of the country through the weekend. There's concern and anticipation in Arkansas.
Alrighty, I am back, guys.
all weekend. Got us.
All right, I am back. Shay, are you there? Are you there? Going once, going twice. Hello?
I'm here.
Yeah. So you said you asked about something there? You said you wanted to ask about something.
Oh yeah, you put that Elon was a liar about his robo-taxi. I'm like, yeah, he didn't lie about anything. I didn't understand what you meant by that.
Well, we're not gonna get too deep into an Elon conversation, but
Lord.
but he no, he said that essentially that there are no more essentially, I forget what they call them, like safety advisors or anything like that with the autonomous vehicles, but actually that's a lie. They just have them trailing in a car behind it.
Well, they said that they removed the person from inside of the car.
Which is a lie of omission. Really, all you did was, like, basically he's trying to make it seem like the car is just doing this, and they don't need the person there. But clearly you still need the person there. That's why they're following the car.
No, but that's like the beta. That's step. So to call him a liar is, I thought it was.
It's a lie.
He said that the person, the announcement was that the person does no longer need to be inside of the vehicle. That is a true statement.
Shay,
You know what I'm
Shay.
You said
I think we both know that what he wanted people to assume was that this shit was just super safe without the person present at all. But they clearly still have to be present. Where they can remote control it. So that's why they're close by. They can actually still take control of the car. Like, it is a lie.
the same as he says that the person is no longer in the car. And they're behind it now. It's still a progression in the right direction. Yeah, I know.
It is a lie. Moving on. Like that's like, okay. So if I tell my kid, hey, you're on your own, but I keep dropping $20 in their bank account without them actually seeing me do it, are they actually on their own, or is that a lie? It's a lie, right? So, the point is simple, right? His announcement was to lead people to believe that there was no longer a need for this safety person. That's what the announcement was there for, right? He could have just said, we're gonna. Okay, why didn't he mention that people was going to be trailing behind the car and all that stuff? Why not? Because
I don't know if that's every single situation.
they have it on multiple occasions. They show a person trailing behind the car, like the whole time.
All of them, like it matter, right? Or in some occasions, or all occasions.
The fact that you're doing it at all says that you still don't trust this, and so you shouldn't put it out there as something that people should trust. He should just stop doing that. That it's just a lie. It's a lie.
That's the way you look at it, but it's different.
I get it. I understand. So here's what I will say. I understand why you don't think it's a lie. I'll say that. You know what I mean?
You say you understand why I don't think it's a lie?
Yeah, I understand. I get it. Right?
Because it's every scenario.
No, that's not what I said. I'm saying I understand why you don't think it's a lie because, you just stated how you see it. You know what I mean? You said, basically, if the person's no longer in the car, right, then...
that's trouble.
Right. I get it. right? But from my perspective, you know, it's somewhat of a liable mission. You're familiar with this term, right?
It's a what?
A liable mission.
Oh, yeah.
Right? That's what I'm basically saying, right? Like, so let me see if I can go back to this announcement here.
Yes.
See, look. When Musk says there's no safety monitor in the car, he's technically telling the truth, they say. Again,
Yeah.
no, he's not, because they're still there. But okay, Shay, listen very carefully. They are still trailing behind the car to have exact remote access of it, which means they're still in the car. They may not be in the car physically, but they're still in the car technically, holding like the reins. They may be letting the horse run by itself and choose its own direction, but they can pull the reins anytime they want, so the horse isn't running alone. That's my point. That's what makes it a lie. Notice this is why they had to say no safety monitor in the car. He's technically telling the truth. The monitor's in a different car following right behind it. But the implication that Tesla has achieved true unsupervised autonomy is misleading at best. It's misleading. That's at best. So meaning those who monitor the situation would say, you know, the best we can give him is you misled people. And that's them saying we don't want to use the word lie. That's what they're saying. Because you, right? No, they don't want to use the word lie because it's politics, right? That's why somebody says, you know, at best. They're basically saying that's the best I can give you. They're not saying that's the worst I can give you. They're saying that's the best I can give you is that you misled people, right? The worst I can give you is to really tell you what's on my mind.
How long do you think he's gonna have people driving behind it? That's not even scalable.
I don't know.
It won't even be cost effective. I'm assuming that's just like a beta thing.
Yeah, I don't know how long he plans on doing it. All I know is he should have just told the truth to begin with. That's all I'm gonna say. Right? Like, yes. Right? Like, he claims to have solved autonomy. Like, you understand that? Like, so by the way, he said,
participating in these robo-taxis regardless, anyways.
No, that's not true.
They're always gonna monitor it. Are you kidding me?
Monitoring it and driving right behind it so that way you can quickly grab control of it are two different things. So two totally different things. Like, this guy is a liar. He's been that.
Tell me, if you're behind the car, even if you have remote access, how fast are you going to react if that car is about to hit someone and you're behind it driving a whole nother vehicle?
Pretty fast. Pretty fast. Right?
I would assume it's just for monitoring purposes. You're not the way you're figuring it out.
That's the whole reason that person was in the car to begin with.
Yeah, in the car. They can see it.
But that's the same reason they're behind it.
When you're a car length behind, it's speed or prevent something as quickly as it would as if you were in the car. It's not the same type of monitoring. I can't remember.
It doesn't matter. The point is, he lied. That's it.
So, right.
Zeman is a liar. He's a liar. You know, it's all right, man. Look, like I said, you know, if you don't look at it as a lie, that's no problem. You know. Now, the publication I'm reading from, right?
I know when you put it here.
Yeah, the publication I'm reading from. These people are some of his biggest fans. Right? Like the Electrek, Some of the biggest Elon fans, right? So you know that to be true, right? So if they're telling him misleading at best, and they're some of his biggest fans, come on now. Like the best I can say is you misled people. That's crazy. I'm just saying.
No, I just look at it. I don't see a lie.
I get how you look at it. I get it. I guess what I'm saying is the reality is, right? To mislead people in that way, to me that's always a lie. Misleading to what extent is what makes it a lie, in my opinion, right? Because you're misleading us to the point of believing something exists that doesn't exist. Right? Like, so you're leading us to believe the safety monitor is just gone. And that's what he was trying to do. So let's not do that.
No, no longer requires having safety monitor installed. How is that a lie when no longer it's
again? So okay, so there's a reason I took it back to horse and carriage days, right? So I'm going to explain this, right? So imagine you used to drive a wagon, right? A horse wagon, right? And I used to have 3 armed gunmen behind you. I'm sorry, in the wagon, right? Just in case you got robbed along the way. You listen to me so far?
Oh my God!
No. Just hear me out, please. Listen to this very carefully, right? You don't know what that is yet. Again, I want you to imagine. I'm taking it back to these days so that way you can fully understand it. So you drive a wagon, you deliver goods, right? You're in the transportation business. You deliver goods, right? And so I want you to imagine I used to have 3 armed guards in the back with the goods, right? Because people often got robbed on the way, okay?
Mm-hmm.
Then I want you to imagine I say to you, you know what? The roads are safe now. You don't need those armed guards in the back, right? And then I start having the 3 armed guards follow you on the trail. Come on now. There's no way you're telling me that you won't believe this dude is gaslighting me. Like, because if he said I'm so safe, I don't need these armed guards in the back of my car in the back of my wagon anymore, right? Then why does he need to have them follow me in another wagon? Clearly, I am not safe, or as safe as he claims I am. That's all I'm saying. That's what makes it a lie. I clearly just lied to you by telling you were safe enough that you didn't need them. Because I literally had them follow you anyway. It's a clear lie.
That one is a different scenario.
No, it's the exact same scenario, ma'am.
No.
That is the exact same scenario. Is the safety monitor in there for your safety? Obviously, yes. That's why he's called the safety monitor. Right? Are the 3 guys in your wagon there for your safety? Yes. It's the same scenario. Did I say I remove them because you no longer need them? Yes. Did he say he removed the safety monitor because you no longer need it? Yes. Both the same scenario. Did I say that they're going to follow you anyway? Yes. Does he have them follow you anyway? Yes. Same scenario. So if you look at one as a lie, they are both a lie. Unless you don't think the wagon one was a lie either.
The wagon one is certainly a lie.
It's the so damn I'm done now. I'm leaving it alone now. I ain't saying nothing else.
Often or every time or sporadically where this person is trailing.
Well, I mean, the fact that they was able to record it multiple times already says that it's happening enough. But either way, if you think the wagon one is a lie, then you think Elon's a liar. You don't want to say it. But it's okay. It's okay. If the wagon example is a lie, ma'am, then Elon's a liar. You know,
Yes.
supervised as hell.
So it started. FDS RNC.
While they supervise the hell out of them. Craziness. Matter of fact, that's like saying you're sending your kids to the zoo, you know, with the school, you know, the school, right? The kids are at the zoo unsupervised, but you got teachers following them in the background, hiding behind giraffes and you know what I'm saying? Yeah. These kids are not unsupervised. They definitely have adult supervision. They just don't know they have adult supervision. Same thing. They're lying to the kids. You know, but hey, you know. I get you though. I understand your opinion, ma'am. I hear you.
You know, it's freaking hilarious. Like I said, I'm not going to, go back and forth over and over again with the same premise, but that is crazy that you come up to that conclusion.
You just came to the same conclusion.
I did not.
You did. You said the wagon was a lie.
The wagon is certainly a lie.
And the wagon. So okay, we're gonna talk about this later. I'm gonna see in the what you call it when we do our night room, show up. I'm gonna take a poll. We're not gonna mention it's Elon. We're not gonna mention it's Tesla.
Oh my God.
We're just gonna paint a plain example of, you have a taxi that drives itself. They used to have somebody in the taxi that was there for your safety. They then claim that they moved the person because they no longer needed, but they had the person follow you anyway in another car, right? And then I'm going to explain the wagon example. And I'm going to ask them, are those the same examples? Yes or no? If the majority answer yes, then say you believe Elon is a liar. You just don't want to say it. If the majority says no, then I yield, and you win. Okay, this is what we're gonna do. Do the safety monitors following get the tip after the route? Cecily is hilarious. What's going on, Mr. Chill? Shout out for the follow. Much appreciated. Much appreciated. We're just over here talking about how Elon is a fabricator of all fabricators. Hey, that man's mouth is a 3D printer, man, the way he fabricates.
Not a 3D printer.
That man's mouth is a 3D printer. He can fabricate anything.
So with this 3D printer stuff, you want to ask, like, what are they really printing in 3D?
Yeah, I've seen it. Oh, it's amazing, actually. So when I said his mouth is like a 3D printer, it can print anything, is because a 3D printer can literally print anything. Anything.
I don't understand how it works.
So I'll break it down. So check this out, right? So first things first, it's certain materials, right? So we can use certain materials, like certain types of metals, certain types of plastics, different types of things, right? And they usually come in like yarns or threads, pretty much. So imagine you had a plastic thread that you can string in, and it basically is being melted down and then and used to kind of again, aka print something out, right? So, or a metal thread, and that's being melted down to print something out. So pretty much what the 3D printer can do is it can be given a design. Let's say I give it a design of a cup. Keeping it simple, right? It can literally just print out a cup right there for you, right? And I mean just to the T. So it'll probably print out the bottom first and start going around, and you know what I mean? And then just building the cup, boom, then boom, you got yourself a cup, right? It's just like that. It will literally print out a cup for you if you ask to. It will print out a building design for you. Let's say you want to, you want to build a model city to show your people at work for a project or something like that, right? You can give it the design for the metal city for the city, and it will print out the city, the whole city.
I'm sorry.
Yeah.
To interrupt. Question.
Yes, ma'am.
The Netflix. Was it 8? What was it? Get out. The take profit. did we say?
Give me a second. Let me go over there real quick.
Sorry, y'all.
No, you're good. So the 96.84. No, actually, it was actually 94 bucks was the main target. So you can take profit halfway between that. So that would have been that was 88 bucks. I think it was, Alicia. So 88 bucks was your first profit. So we got a little ways to go. It's running, huh? It's making moves.
Stop.
I mean, it's doing all right.
Trigger getting ready. Netflix.
Let Netflix cook, man. Let them cook.
They cooking now. Let them cook.
Let them cook, man. Oh, remember I told you guys too. Sometimes I look at so many different ways of taking profit. It doesn't have to be so mechanical, right? Like, I will sell somebody the Delta I have, Alicia.
I wanted to talk to you about that anyway.
Talk
I'm
to
in IWM put, and I want to take my profit, but I don't want to get out of my put.
So think about what I talked to Doreen about, right? Look at the level that you're passing. Look at the level that you're passing behind you, right? So, like for example, Oliver Velez might say, right? Look at the candle that made you rich, for example, right? So you got this this most recent candle to the downside. Now, now clearly, let me point this out. Which direction is the rest of the market going? Right?
Up,
right? So,
but IWM is
right,
kind of weird.
No, you're doing the right thing with the short.
Okay.
But you may be doing the wrong thing mentally. Let me explain it to you. So, if you've already made money on IWM, right? You have to ask yourself right now, what are the odds that it just keeps going down while the rest of the market's going up? And I'll give you the odds. That's 30%. You have a 30% chance of that happening. You have a 70% chance of IWM actually recovering to some degree today.
Got it.
Okay? So here's what you can do. Go to the 5-minute chart and watch. See this high right here, for example? Right here. Boom. All right, maybe 266.79 right there.
Okay.
All right, so you look at that and you say, okay, cool. If we break that, I'm out of there. So just start to mark what's behind you. Just keep marking it. So for example, like right now, if IWM went down again right now, then you would mark this one. That's behind you, right here. Here it is right there. But you can't mark it now because it's not really set in stone. You see? Are you looking at my screen? Looking at my screen?
I'm looking at your screen. I'm watching it.
Okay.
Yes.
So you need to break this. So once you break this other low right here, see this low right here, this low that this number 1 right there.
Huh?
You break that low, then you move. Boom. I'm going here now.
Okay.
All right. Now, obviously, at some point, you sell into the strength. Meaning, you got to sell as it's going down, as it's running, as it's pushing. At some point, you got to do that.
Makes sense. And honestly, from the, what do you know, the 5-minute?
Mm-hmm.
I should have already taken full profit based on this.
Well, you're in the full profit zone still.
Yeah, I am.
Right?
Okay.
You're still in the full profit zone. So, up to you. Right? You can at least take a partial profit if you need to. And let let her run, let her cook. You know what I'm saying?
Thank you.
Yeah, no problem.
This is awesome. Like we just keep moving the stop loss to the downside versus like when we do it to the upside.
Right. Same deal. All right, just keep following it down within the structure. So every time it sets a lower high, bring it down to that lower high. All right, and you just keep doing that. All right. You know what, though? You ready for this? Let me do this real quick, Alicia. Hold on. Let's close that real quick. Let's bring this up here. How did I know that? Right at the 50%, pretty much. Right at the 50%, pretty much. So this is always a great target. Always a great target. Like, so for me, if I've been in up here and I got in, notice that break of the 20% really created a rush. It created a rush. So now the question is, are they just accumulating below this point here? Just picking up some orders, and then they're just gonna just boom. All right. But the 50% retracement is always a great point to take profit. Always remember that. Always a great place to take profit. Look at how it consolidated on that 20 though. See that? On that 20%. Nice there. Now, I'm gonna say this, Alicia. Get this. A break above either this level or this one could mean the opportunity to actually take them back to the upside now. That's what I like. Pretty, because now you're setting a low, coming into a change of character here. All right. And that's just, going to be, and it's a 50% retracement at that. So you'll see. So, just watch it. Draw your trend lines and watch it closely. What's going on over here? We need that previous day is high here. Let's go back to XLK over here real quick. We need 87.78 for Netflix. Which, by the way, oh, that's crazy. Look at 88. Look at it. Look at it. That's crazy. There's your 88 right there, the 5-day trend. So if Netflix can break that 5-day trend by the end of the day, y'all know what we need to do. You got a little momentum happening right now. We're not gonna doubt. Let it cook. Let me see something real quick. So the low here was 81.93. Boom, boom. Look at that right there. $98. There it is. I got an intrigue. So as I was trying to build this algorithm last night, right? I was trying to build in a I was trying to build in a, what do you call it? I was trying to build in a profit targeting system in it. All right. And in the profit targeting system, it just wouldn't get it right. I kept trying to do it, and it wouldn't get it right. Right. I was trying to use the ATR. So I was like, you know what? Let's go with some logic here, and essentially, what logically would be the how would you handle it if I told you to ignore the ATR? And the point gets brought up that the stop losses be not stop losses, the take profits be set based on every other level from the entry. So pretty much, right? 1, 2 levels is the first target. 1, 2 levels is the second target. It's pretty much what it was proposing. All right. And of course, boom, your 14-week high would have been the third target. I thought that was pretty interesting proposal. Like, these things are supposed to be strategies, guys, right? That's a take profit strategy. Excuse me. What are you doing? One second. All this ruckus because Savannah see another dog out the window. Maya don't even know what she barking at because she can't even see out the window. The wildness. Anyways, so yeah, that's pretty interesting to see how this 98 kind of lines up with one of our profit targets as well. So who knows, Alicia? This 90.5 could be a great target as well. That 90.5 right there. You see that? Right around.
Yeah. Yeah.
All right. That'd be a great target there. All right, for a midway target. I don't know. I'm just saying. To test that negative 80% sounds like a good deal. I think I'm gonna do it.
Mark, what are your probabilities, sir?
High. I wouldn't do it if it wasn't. Obviously, if we hit 88 by the end of the day, obviously I'm going to reduce my risk, by taking profit there. But yeah. So we'll see. We'll see. And what you can do, and we'll probably talk about it in the power hour, what you can do is just roll your Netflix call out a few strikes, and that'll put some money back in your pocket. See how that works? Remember, what did I say? It's about putting cash back in your account.
Yes, I do remember that.
That's all it's about. Right? So if you got however many contracts it is, right? Like I will roll all those contracts up and hold on to the cash. That splits the difference. And I'm just like, and that's why I said you can focus on delta as well for taking profit, you know? All right, cool. I want to take some profit. Let me roll this back to the delta I started with. Right?
Makes sense.
Pretty simple. All right, I think we started with 30 delta, right? So right now, and so you got to think about I'm selling some delta, you know, I'm selling some delta to somebody else, you see, in that regard. So looks like Bank of America is recovering a little bit. I'm not looking at the chart. I just saw it in my portfolio there. So for example, we got about 5 delta to spare right now. All right. So in that regard, you would be securing almost all of today's profits would be secured. In fact, a little more than the total profit would be secured if you were to roll back to 30 delta right now. Got to play the game the way it's meant to be played, Alicia. Got to play the game the way it's meant to be played. And there's a lot of rules, but there's a you know there's a lot of strategies as well. Rolling the delta is one of my favorite things to do, by the way. One of my favorite things to do is rolling the delta. We're at 15.4 on the VIX. That means by Monday we'll probably be able to, you know, go on and get that done. Go on and get her done. All right. I got a call in about 20 minutes. I will see you guys in the power hour. Everybody be blessed, stay well. Today was a good day though. We got some things done.
It was.
Done. So what are you gonna do? You gonna roll your delta or you gonna close some contracts? Which one?
I think I'm gonna roll.
Let's roll it.
Yeah, I'm gonna roll it.
Let me put it in the chat. Put it in the chat. We rolling.
I'm always going to go back and then try to hop back in.
All right. Excellent.
Mm-hmm.
Man. Okay. I'm just putting it in the chat real quick.
RWM said, let's go. Let's drop.
It's still going. Nice. So you marking that next one now, right?
I am.
All right, good deal. Oh, and so in the middle of an expansion, right? In the middle of an expansion, on that second expansion candle, so basically the second candle after the low gets broken. So you know that point where it had the one, right?
Yes.
On the-
I'm just talking.
On the second expansion candle, then you can mark the high of that as a temporary stop. Because it depends if the expansion is wide. If it's wide,
It is.
okay. If
The
it's,
second one. Well, I'm on the 5 minute. Which one should I be on?
yeah, 5 minutes. Yeah.
Okay.
If the expansion is wide, then mark the high that bigger one,
Mm-hmm.
right? Instead of having it go all the way back to that previous high. You mark the previous high just in case it drops and then pulls right back up. But if it drops and keeps dropping, you see what I'm saying? If it does that, then you mark the high of one of those candles that were expanding to the downside. And typically you're marking the high of that one in the midpoint. So that it's usually the second candle that broke the low. Well, it's usually the candle that broke the low, it closed below the low, and then the candle that comes after that is what I'm talking about.
That's so cool. I just love this so much.
Yeah.
I mean, even when I lose, I still like to learn from it. So
Same here. Alrighty. Netflix looks like it certainly wants to go to that 88. And in the meantime, tech has given back all of its gains. That's how they feel. But look at where they came from, though. They went up and hit that high volume node again. Remember, what did we say? We said they like to visit that high volume node again, right? And they did it. So went right back up to that high volume node. Lovely stuff. And that's the part. This is the part that I like about it, is like just seeing things play out however they play out. Whatever happens, it is what it is. I just like to see it happen. And like you said, win or lose, good to be a part of the game. Need to order me some new journals. Yes, Lord. All right, y'all. I'll catch up with y'all later.
thank you. Later.
Later, guys.